Hello and welcome to this free Forex beginner course by Wesdemi. My name is King Wesley and I'm going to be your tutor for this course. All right. Now, before I even go on to teach and introduce you to the world of Forex trading, I first of all want to congratulate you for starting this journey. All right. A few years ago, I think about 2 getting to 3 years ago, I started this journey and I have not regretted it ever since. My life has changed and I have been blessed by this. Forex is a gift that keeps giving. All right. So I want to encourage you and I want to tell you that this is the right choice you've made. And as long as you're persistent and determined, you will have a cause to smile at the Forex market. Now diving into what we have for today, okay? Introduction to Forex trading, all right? So I'm gonna be introducing you to the world of foreign exchange. All right. So let's dive in. Now, forex trading is also known as foreign exchange trading, and it refers to the buying and selling of currency in the global market. It is the most traded financial market in the world with an average daily trading volume of $6.6 trillion. Forex trading involves exchanging one currency for another in the hopes of making a profit from the exchange in their relative values. All right. So what this is trying to say in summary is that Forex, first of all, stands for foreign exchange. The FOR stands for foreign, while the EX stands for exchange. All right. Now, this foreign exchange market trades over $6.6 trillion every single day. It means when the market opens on Monday, it trades over $6.6 trillion. When it opens on Tuesday, it trades over $6.6 trillion again. So basically, what this is trying to tell you is that every single day we have more than $6 trillion flowing into the forex market. Now, this $6 trillion or the amount that is being traded, it literally means that you can make up to $6 trillion a day. As far as you have every shall I say every necessary tool for that in place, it means you can make over $1 million a day. Of course, we've had people who done that. You can make up to $1 trillion in one single day trading the forex market. That is the possibility and opportunity that lies in this forex space. All right. Now, forex trading simply involves the trading and exchanging of currencies of one currency for another with the hopes of making profit. So it simply means when we buy a currency and or sell a currency, we are simply doing that with the hopes of making profit. All right. Now let's keep going. Okay. Now, you shouldn't forget, all right, this is an introductory class, so I'd love you to be calm and follow because your foundation matters in the forex trading industry. All right. Now, the forex market is a decentralized global market where all the world's currency are exchanged. It operates 24 hours a day, 5 days a week, and the market is divided into three main sessions. It is divided into the Asian session, it's divided into the London session, and also the New York trading session. All right. Now, each of this session has its own distinct characteristics and also trading opportunities. All right. Now, basically, what I'm actually trying to say here, or what I'm actually trying to tell you, is that the major thing you need to know is that the forex market is open 24 hours a day, 5 days a week. So the forex market is open on Monday, on Tuesday, on Wednesday, on Thursday, and on Friday. Now, on Saturday and Sunday, the market is closed. All right. So the banks or the forex market do not trade on weekends. It only trades 5 days a week, which is from Monday to Friday. So during the weekends, the forex market is closed. All right. And then now the forex market has three main sessions. All right. Take note of this. All right. Write it in your book as you are taking notes on this video. All right. The forex market has three main sessions. It has the Asian session, the London or European session, and then the New York session or North American section. All right. Now, we also have other should I say, other sessions, which are not considered to be the mid sessions, and then I will tell you why later on, all right? But then we also have the Sydney Tokyo session, all right? So, but then we have three major sessions, and then these are the three major sessions I want you to focus on right now, okay? Which are the Asian session, the London session, and then the New York session, all right? Now, the London session is considered the most volatile session, all right? Now, what do we talk, or what do we mean when we say the most volatile session, all right? Now, I'm going to give you an instance, okay? Now, when you go to the market, all right, and then you have lots of people buying and selling, all right. Now, what flows in that kind of environment, or what flows in that kind of market, is what money, all right. So, let me give you a more practical example. Let me see, maybe you went to the market to buy something, all right, and then you give someone maybe 1,000 naira, for instance, and then you're supposed to have a balance of let's say 500 naira, okay. Now, when the market is volatile, you will get your change in cash, all right. You'll have your balance, 500 naira balance given back to you, okay. But then if the market is not volatile, you will not have any change at that point, or maybe you might waste time before you actually get your balance in cash. Now, technically explaining this, when we talk about volatility in the market, we are basically just referring to money, all right, flow of money. Now, the reason why we say the London session is the most volatile is because the London session happens to be one of the most traded sessions, all right. It is the most traded session. So now, when we have lots of traders around the world trading the London session, the market moves pretty well. All right, the market moves well because it's busy, it's volatile. People that are trading the market, so the market moves well. Same thing with the New York session. Okay, the New York session is also volatile, but it's not as volatile as the London session because the London session is the most traded, all right? Then followed by the New York and then the Asian session, all right? Now the Asian session is not as volatile as the New York and the London session because the Asian session is not as traded as the London session, all right? Now the most traded to the less traded. Okay, so what I'm basically trying to say is that the London session is the most traded, followed by the New York session, and then the Asia session. All right, so let's keep going, guys. Let's keep going. Now, the next thing we are actually looking at is what the currencies that are traded in the Forex market every single day. All right. Now, in case you're asking what is traded in the Forex market, now the simple answer is money. What do we trade in the Forex market? We trade money. We buy and sell money with money. That makes sense to you now? All right, I'm going to give you an instance, okay? Let me say you're about to travel out. Okay, let me say maybe you're from Nigeria and then you want to travel to Canada. All right? Now, in Nigeria, the money we use or the currency we use is called Naira. Now, if you're going to travel to Canada, for instance, okay? In Canada, the currency they use over there is called the Canadian dollar. All right. Now, when you are at the airport in Nigeria, you will have to exchange your Naira for Canadian dollars. All right. When you're at the airport, you have to exchange your Naira for Canadian dollars so that you can be able to spend it in Canada. Now, what you are literally doing is buying Canadian dollar with your Naira. Oh, you get it now, innit? That is basically what we do in the Forex market. We buy and sell money. Simple. Now, think of buying a currency as buying a share in a particular country. All right. Now, when you buy, let's take for instance USD, which stands for the United States dollar, you are basically buying a share in the US economy. You are anticipating that the US economy will do well and will even get better as time goes on. Now, once you sell those shares back to the market, hopefully you end up with profit. All right. So basically, one thing you need to know that we do in the Forex market, and you should write this down, is that we buy low and sell high. All right. Now, when we anticipate that this currency is going to move up, okay, like lately, for people who are in Nigeria, for Nigerians, you can relate to this more, to what I'm about to say right now, more better. All right. Now, right now in Nigeria, a dollar is equal to about 750 naira. Okay. Now, there was a time in Nigeria where $1 was equal 400 naira. Now you will have seen that in Nigeria the price of dollar has scaled up. All right. Now let's assume you had the knowledge of forex when dollar was equal to 400 naira. Now you know that okay, there's a very high possibility that dollar was gonna go up to 700 naira from 400 naira. Now what you're gonna do is you're gonna use your naira to buy dollar and keep. Okay, then when dollar goes up, you sell and you're gonna make profit. All right. Now that is a typical way of trading forex. But then it is also same thing we do currently in the forex trading market. We buy low and sell high. All right. So when we buy the US dollar, we anticipate that the economy is gonna go up and we're gonna make some profits. All right. So you can see on my screen right here that we have tables. All right. We have tables that contains a symbol, a country, and currency with the nickname. Okay. So for USD, it's it's the currency for the United States, and then their currency is dollar, and the nickname is buck. All right. That's why if you maybe you're someone who watch lots of movies, you'll be like, hey, you got $2 with you, stuff like that. You get so the nickname for dollar is buck. All right. So when you hear a trader saying, hey man, buck is going up, it means trying to say US dollar is going up. All right. Now the next is euro, and is from the the European area. Okay. The currency the use over there is called euros, and then the nickname is fiber. All right. Now the symbol for this is EUR. Okay. It's EUR. Now the next symbol is JPY. The country is Japan. So Japanese people or the Japanese actually use what? The Japanese yen. And then the symbol for the Japanese yen is what? JPY. All right. The nickname is yen. Now the next symbol GBP. All right. It's of the country, the Great Britain, England. All right. Now the currency is called pound and the nickname is cable. The next CHF for Switzerland. All right, the currency is Switzerland francs, and then the nickname is Swizzy. The next symbol is CAD, card. All right, for the country of Canada, the currency is what the Canadian dollar. All right, and then the nickname is Loni. So the next is what the AUD of the country of Australia. Their currency is the Australian dollar, and then their nickname is what the nickname for the currency is called Kiwi. All right. Now, all these currencies you can see right here are what major currency. We also have other currencies. We have like the NZD, which is the New Zealand dollar. All right. So we have lots of other currencies which you're actually going to explore as time goes on. But for now, I want you to focus on this. All right. So let's keep going. Okay. Let's keep going. Let's keep going. I'm really glad we achieved a lot today, and I'm really, really sure you're learning. All right. Now we have terminologies that are used in the forex trading market. All right. There's a way traders talk. There are some terms we use, and for you to become a forex trader, you have to understand these terms. All right, so that you're gonna be able to relate when forex traders talk, or when you are talking as a forex trader yourself. All right. So the first terminology we're gonna be looking at is what pips. Now, a pip is the smallest unit of price for any currency. Okay, so that is what a pip is. Now, currency pair are two currencies traded as one. Simply. All right. Now, spread. Spread is the difference between the bid and ask price. All right. Now, a bid price is the price at which the market is prepared to buy a specific currency pair in the forex market. Okay. So you can say a bid price is that particular price that the market is ready to buy. It's just the price of that asset or that currency at that particular time. All right. Now, the ask price. Now, the ask price is the price the market is ready to sell a specific currency pair. Okay. Let's assume you come to West Demi and say, hey, West Demi, or you meet an uncle somewhere and say, hey, uncle, I want to buy a car. All right. And then your uncle tell you, I'm ready to sell this car to you at 1 million naira. Now, your uncle is giving you the ask price. All right. Let's assume you buy the car and then maybe the value goes up and then you come back to your uncle and say, hey, uncle, I want to sell this car to you. Now your uncle will say, okay, I'm ready to buy this car at 2 million naira. That is the bid price. All right, that is the bid price, as simple as that is. Now the next terminology we're going to be looking at is what leverage. Leverage is the ratio of the amount capital used in the transaction to the required security deposits, which is also known as margin. All right. Now, the ability to control large dollar amounts of a security or asset or currency pair, okay, with a relatively small amount of capital. So when you talk about leverage, it's more like you are leveraging on what you have. You can have $100, but then using a particular leverage, your $100 can appear to look like $1,000 in your trading account. That is simply what leverage is. That is simply what leverage does in forex trading. Now, the next terminology, which is more like the favorite terminology of every single forex trader out there, is what the take profit. Okay, so take profit is a type of order linked to a trade for the purpose of automatically closing a running trade with already generated profits. Okay, so let's assume you're on a trade and then it hits your take profit. It means your trade has gone in favor and it has closed with profits. As simple as that is. All right. Now the next terminology is what? The stop loss. Okay, the stop loss. Now the stop loss is a type of order linked to a trade for the purpose of preventing additional losses if price goes against you. Forex trading is a game of winnings and what? The game of wins and losses. All right, it's a game of win and loss. You can make profit, you can lose at some point. Okay, now the stop loss is there to ensure that you do not lose too much. That is what the stop loss is, and that is what the terminology means. Okay, it's a type of order linked to a trade for the purpose of preventing additional losses if price goes against you. Now, the next terminology we're going to be looking at is long or bullish. When you hear someone say, I'm going long on USD card, what the person is trying to say is, I am buying USD card. If the person say, I'm going bullish on USD card, the person is trying to say, I am buying USD card. Same thing with the short and bearish. If someone say, I'm going short on USD, person means I am selling USD. If the person says, I'm going bearish on USD, the person means I'm selling USD. It's the same thing. All right. Now, the next terminology is going to be the last for this is what? Lot size. Now, lot size is the quantity traded. All right, let me say you want to buy a car. You say, hey, give me 4 cars. Now, literally speaking, you're using your lot size for that transaction is what? 4. Because you want to buy 4. The quantity you're getting is 4. So just like when you come to the Forex market also, we have quantities you can buy. All right, so that quantity is what we refer to as lot size in Forex trading. All right, now let's move over to the next. I'm really enjoying this, guys. I really hope you do. Yo, you don't know what you're learning, guys. You're learning a skill that can change your life, and I'm glad to be the one to introduce you to this. All right, it's really a privilege. Okay, now types of trade orders. Okay, we have different types of market orders. All right, we have different types of market orders. Now, different types of market orders. Okay, now the first market order we have is what? A market order is an order to buy or sell at an immediate available price. Okay, so before I continue, we have 4 types of trade orders. We have the market orders, we have the limit entry orders, we have the stop loss order, we have the take profit order. All right. So the first one, which is the market order, is an order to buy at the immediate available price. Just like you go to the market, all right, and say, hey, I want to buy 2 bags of rice. And they say, hey, mister, the 2 bags of rice is at 10,000 naira each. You say, okay, I'm paying for it right now. And then you pay and you go. You've bought or you've placed a market order. Simple as that is. Now, the next order we have is what? The limit entry order. Now, this is an order placed to buy below or sell above the market price. Okay, this is an order placed to buy below or sell above the market at a particular price. All right. Now, using the same explanation or the same example of a bag of rice, let me say you go to buy a bag of rice and say, okay, bag of rice is 10,000 naira, and you're like, yo, that is quite on the high side. All right, I'm gonna buy when it goes down to 5,000 naira, and you're gonna be like, okay, hey, but our rice seller, take 5,000 naira when the price of the bag of rice drops to 5,000 naira, buy it for me. You've placed a limit entry order. As simple as that is. So simple. All right. Now the next is what? The stop loss order. I already explained that initially, and it's a type of order placed on a trade with the purpose of preventing additional losses if price goes against you. All right. And then the take profit order is a type of order linked to a trade for the purpose of automatically closing a running trade with already generated profit. Kudos, because you've just finished your first video about Forex trading. So thanks for watching. This course is going to continue. There are going to be more videos. Make sure to complete it. Make sure to watch every single video till the end. keep learning. All right, keep learning. Forex is a skill that's gonna pay off, man. And I wish you all the best. And from West Demi, I'm really happy to carry you on this journey. Okay, so to stay in contact with me, to stay in contact with West Demi, check the description box below. All our infos are gonna be there. Make sure to follow us across all social media handles. All right. Stay in touch with us on Instagram. Stay in touch with us on WhatsApp and on Facebook. All right. So have an amazing time learning, and I'll see you in the next video.